Thanks for joining us for the Trade Blast for March 4th, 2020. Um, it's always interesting figuring out which shows to provide to which groups, and we just had probably one of the wildest. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time on our channel, welcome. If you're a repeat visitor, welcome back. So, what a trading day yesterday. I'm to the point on the day that we'll probably do our trade blast somewhat on this, and then the main show is probably going to include some of this, but a sort of a different set of topics. So to review what happened, basically the market was up 1,300 points. Tesla was strong with it up into the late 700s. What then happened is the Fed cut interest rates. And so all of a sudden, there was a new data point. Fairly quick period of time. And that downdraft, including Tesla, the last glance I had at it without actually seeing the official number it was down to 721. And I was like, wow, that's amazing. The stock price was up nicely. And now it's getting smashed along with the rest of the market. So so as you know, Tesla finished up above 750, and the market was still down approximately $600. The kind of stated reason for the up for Tesla was that there was an analyst, JMP Securities, did an upgrade for Tesla, sort of giving it permission for some higher numbers going forward. And so I guess that positive news was helpful in sort of an updraft of the stock towards the end of the day. So what we wanted to, so what happened is that I got a note from one of our Patreon supporters regarding, wow, strange trading day today. And I would agree with his assessment. The volatility, huge price moves, et cetera, that occurred have been pretty amazing. As you recall, last week, the markets, I believe, lost like saying, well, what's going to happen with the numbers for all the companies that emerge from that? So I'm really intrigued right now because there's been a shift in the market. So there's a lot of news that's coming out that's saying what just occurred hasn't happened in 100 years, 50 years, all these different numbers. And the question that comes to mind is, what's happened in the last 50 years that wasn't happening in the previous 50 years that represents a huge shift in how things work in the stock market? And the answer, bots. An increasing use of electronic trading methods, be it algorithms. In essence, they're algorithms that are driving trading activity by different firms, but moves up or down based on certain metrics. And they're not, in general, they don't have individuals sitting there saying, this is what we'll do based on all of this. We talked about the 3-day rule, etc. None of those 3-day and other rules apply. They just have pre-programmed determinants on what those machines say and do, and they're free to move large amounts of shares on their own without a human contact, even though the humans might be observing it. So I have to admit that if you Google bot trading or algorithmic trading, it'll give you a feel for, I guess there's some programs out there will teach you about how it works, what's been happening. But one of the things that was highlighted to us a couple of weeks ago was that there's a process where, for example, if the market might be down a certain number of ticks, the bots have permission to go ahead and sell the positions that these hedge funds or other funds may have in a blink of an eye, just dump shares to avoid taking a larger hit. So they might lose. So when you sell a share of stock, in theory, you have the bid and ask, and so you have to go for that lower price. What happens when prices are falling is that you might end up selling, but you might end up selling at a much lower price than anticipated if it's a market order. But basically, what the bots are saying is that we want out now, and we're willing to take a lower price to do it. And so when that happens, you actually have a situation where many multiple bots all at the same time can be selling a stock based on some programmed in data points. So a stock or a market that might be down a certain amount, if one company was selling shares, what happens when 1,000 of them are selling all at the same time? And the answer is dramatically lower stock prices. And so I think that it's awesome to watch the volume or speed of movement, even in a large stock like Tesla, that can occur as these bots go to work. What's also interesting for me to watch is, in the case of Tesla here, what we're seeing is, what we had discussed previously, which is a concept of buying the dip. So as we had this downdraft in the stock price, we're all of a sudden seeing the other side of that, which is, individuals looking at it and saying, we've got a green light to buy Tesla in certain price ranges. And because of what the bot action was in selling, we now have an opportunity to step back in at a great price. And hence, we saw the stock price up yesterday. It's up another, from what I can tell, 20 points pre-market. And, as I shared, approved trading. So the way things have been going, do not be surprised to see Tesla end up back in the high 600s to mid 600s. But if they do end up there, there's sort of an intense buying pressure that seems to be showing up around that price point that sort of pushes it back 700 plus into the 750s, 780s. So, keep your eyes peeled. If you're a heavy duty trader, I think there's some money to be made there on the downdraft. The 700 or just sub 700 seems to be a great place to buy, anticipating the fact that there's a whole bunch of institutions that want in on Tesla, and they're willing to dive back in, even in a sketchy market, to grab a hold of those shares, while other people are seeing, big moves down in that 600 downdraft that we've been discussing. So the answer to what happened yesterday is that we're all learning how and what happens with bots, but it's very clear that they tend to sort of buy the direction or sell the direction of the market pretty heavily. And they do it very quickly, so you can have big moves in the stock price, up or down. Kind of seems like it's in general down. The downdraft portion of that is a lot of people do not want to lose out in terms of cash back in their account as the market starts to tank for some reason. As we all know, the market is extremely skittish right now. And so therefore, my expectation is that if the coronavirus continues to grow, et cetera, I'm really expecting more of this kind of volatility we've seen. And I'm expecting a whole bunch of, entities to sort of get hit by this, good or bad companies. The process seems to be sell it all now, come back, and then buy back the things that we might have made a mistake on. But you don't want to be stuck there in a trading position long term when there's a huge drop in price, because it might be a while before you can remake that money that you've lost. Another note to make that I find interesting, and it's a number I look at when I usually oil prices is one of my focus things that I check. It's up $2 to $2.50, which is pretty dramatically this morning. For those of you who don't know this, oil is actually 2% of the cost of every company in the world. So, so basically, all the lights you have, there are all these things, people's cars, all these things that are have a 2% underlying of oil prices. So it's never a bad thing to just have a gut feel for what that number is. And I encourage you to start watching it as a way to get a feel for what the general market is thinking about the day. Trade blast, because it was such a unique circumstance, so we're introducing bots and how they affect things. We may have a broader audience for this show for that reason, but wanted to definitely thank you for your support on Patreon. And we look forward to providing more information that's useful in this fashion going forward. Please take time to share comments on the thoughts shared, including if you're running a bot. I think that would be kind of cool to get your opinion and thoughts on that as well. Have a great day, and bye for now.